Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, March 7th. Don't forget to run your player at 1.5x. Taking a quick look at futures. Equities are off between 1.5% and 2% as I start the video here at 6:45 in the morning. Oil is up 6%. It was up as high as 9-10% last night. Gold up 1.5%. Briefly traded over 2,000 last night. Copper is flirting with the $5 level, all-time highs. Traded up as high as 5.12 last night. Currently up about 1%. Not much going on in terms of the macro data releases today. I think the biggest thing on the board is if the allies, NATO, has some kind of coordinated sanction on Russian oil. I don't think the U.S. will do that just on its own. I think they'll try to get like a global consensus. There's already been a lot of self-sanctioning going on, but from what I gather, that's going to be $20 to $30 on the price of oil, and probably a third to a half of that is probably already priced in. So if there's some kind of an announcement today or in the days ahead, you'll probably see a spike and then it'll settle into whatever it is, but certainly looks like it's going higher. Let's start out with gold. A lot of you are in this trade. We flagged in the early to low 170s range, 172 and a half, something like that. We went out on the highs on Friday up near, well, what was it? 183.88, so call it 184. You can see on the weekly chart, we've got a level here at 184. We've got a couple levels here and here back in time. What you may want to do, and this is all how you want to manage the trade, but what you could do is, once we get above 184, and we'll open there this morning, what you can do is, of course, you can just hold on your position. That's fine. Or you could roll up to 185 and buy some extra time and see if we don't go to all-time highs up here around the 191 area, 192.50 in that type of a range. If you decide to hold your position and you get that all-time high breakout, later this week or whenever that may come, I would definitely roll up my position, and then you've got a beautiful line to shoot against the all-time highs, and just from that point on, no natural sellers, blue sky overhead, and then you can just see, how high it goes. But at a certain point, I would book some of those gains, roll out, buy some more time, and just stay long. Miners. Some of you are in individual names. Some of you are in the GDX. You can see we flagged this breakout here a couple of weeks ago. Took a while to get going. Now we're up in this 3750 range. We've got a resistance level at 39. You can see going back in the charts, there was a high right here of 39. I am in this trade. What I'm going to do is hold on to my position now and then wait for a move that takes out 39. And then, and I have a spread, so it might be a little different than what you have. So I have I think I have a 35-39 call spread in April. What I'll probably do is just buy some 40s, and then see if we don't go to the all-time highs up in the mid 44s. And then I will use 39 as a stop, not only for my new position, but to close this one out. If we were to fall back below, I would just close the one below. I think it's going higher, but you got to consider the downside. Remember, we've got an FOMC meeting in 2 weeks, and that's always a volatile time for gold. Whether it goes up or down, who knows? So, especially if they were to come out with a surprise 50 basis point rate hike, gold might not like that too much. So we'll just have to wait and see. That's still a week and a half away. So let's move into SPY. What I've done, we're due to gap down, whether that's a lot or a little. Hard to tell where we may open exactly. So I've kind of realized that there's going to be a gap on these charts that you should fill in on the open, and then use your gap rules that we talk about all the time, whether they try to make a run to fill that gap or quickly move away from it to the downside. But I think 425 on your SPY chart is going to be an important level. In futures, it held that level most of the night, maybe did a little undercut of it, then recovered it. I think 425 is going to be important. The next level below that is this low here that we had. That was the first initial run at the lows down at 420. That would be my next level. And then the next level below that is the low that we had what was it, last Monday, something like that. Or no, that was a Thursday. I remember that was a Thursday. We got the big run up, and then we rolled over since then. So down at 411, something like that. And while I got you, I've got some overnight lows on futures that you may want to mark. On ES, I had a low of 42.38. On NQ, I had an overnight low of 13.527. And on small caps, RTY, I had a low of 19.48. The reason I gave you those numbers is, remember that during the live session, whether you're tracking SPY, the regular indexes, or if you keep an eye on futures, a lot of times during the regular session, they will find a way to come back and retag those overnight lows, at least for a back test. Sometimes they break it and go lower. Sometimes they just come back for a retest. But at any rate, you should always mark your highs and lows of the overnight session in your pre-work, just to simply know where they are. Here on the 2 hour, I've got those same levels marked for you. Keep in mind this downtrend line, that is more or less a line of demarcation, whether you're on the daily chart or working on lower time frames. I would be fading any moves into this downtrend line until price can prove that it can break out. And you can see that it's had a lot of trouble, aside from fake breakouts, a lot of trouble really getting anything going to the upside. Here it is on the 30-minute chart. You can see that we've got an open gap above. Of course, we're going to be most likely gapping down into this 426 type area. So there'll be a sizable overhead gap when we open this morning, unless something dramatic happens in the pre-market. Very much the same kind of idea on the Qs. we are going to open down towards this 332.50 area with a gap above. You can see the sharp downtrend line. You can see that we've been in the bearish regime for really since the beginning of 2022. RSI isn't showing any signs that it wants to break out and go bullish. Same thing on momentum. Once we lost the zero line, moved us down into the bearish regime on momentum. And you can see these various rollovers of momentum below the zero line. And as we've discussed many times, when you get a bear cross on momentum below the zero line, it's almost always an indication that price is heading lower. Here we are in the 2 hour. I think 335 is an important line. Also, if I show you, here on the 30-minute chart, you've got a line of support here around 332, and then there's an important line down at 325 that if that one was breached, then all that's left is the prior low. Of course, we're gonna open with most likely a gap down. So mark that in your charts once we open the cash session. IWM, the most bearish of all the charts, even though it's been hanging in there lately, it's been consolidating within this $20 wide range, really unable to get above this 206 level. Everything else has been below it. We've got a full bearish stack on the EMAs. That tells me you've got to default to the downside until at least price can start making some kind of a move higher and recapturing some of these faster moving averages. You can see the 8 and the 20 there are together. But now we're going to gap down into this 196, 195 area. And then you can see there's not a lot holding it from going down to this 192, 189 area. And if you remember back, let's see if I can find it here for you. On this weekly structure, we had the fake breakout way back when at the end of 21. We moved back into this $23 wide consolidation range, broke that. That was a big one, year-long consolidation breakdown. We moved down quickly to 190. We back touched the breakdown at 210, and now we're inching our way down towards this 190. You can see where the fibs come in, and just on a measured move basis points to a number around 170 on the weekly chart. So that remains a target sitting out there on these bearish charts of IWM. We've got a downtrend line on the 2 hour. We're going to be opening down around 195, and then you can see where these lower levels come in towards 192 and then 188. Here's just more resolution on the 30-minute chart. At this point, I'd like to welcome any new visitors to the YouTube channel. Thank you so much for spending time with me early in the morning. I do my best to set you guys up and the team for a good day of trading by pre-identifying the support and resistance levels, giving you very objective lines to shoot against in your trades, where you can put nice tight stops in. And I think that's the first step in good trading, is having good levels to work against. And if you continue to spend time with me, I think you'll gain confidence in the levels that I give you. If that sounds appealing to you, please subscribe, hit the alarm bell, hit the like button, leave me a comment on sectors or stocks you'd like to see me work up in future episodes. Be happy to do that for you. Then jump over in the show notes. You'll find a link to the blog site where you can drop in your email address, officially become part of the team. Then morning, noon, or night, you'll get any and all of my content that I send out, whether they're trade ideas, market observations, strategy, whatever the case may be. We'd love to have you. And then if you do that, you'll also get an invite link to our trading room, where you'll find a lot of inspired, aspiring traders that are working hard to get better in their trading. So moving on to Fat Man. With Facebook here, I've expanded the chart a little bit so we can get some resolution on these 60-minute charts. You can see here we've got a pivot at 198. If we were to lose that, I think you're probably going to go down to this 189 level at the prior low, give that a test, and then see where we go from there. On the high side, we've got a pivot here at 204 where it meets downtrend resistance. If you got to move into that area, I think the trade is a fade. That's an objective short. So if you got long down here and you got a $5 pop in the 204, I think you got to wait until price proves it can take out the downtrend line before you get, really, really bullish. Apple has held up really, really well. A lot of speculation out there that the plunge protection team is furiously buying this and other fat man names to keep the indexes up. Whether they are or they aren't doesn't really make any difference who the buyers are. This is not broken down really at all compared to the rest of the market. So today, I think 163 is definitely a pivot. I had looked earlier this morning and it was down in this 160 area. I think your downside pivot is going to be the bottom of this box at 159. If it were to lose that level, then I think you're coming in towards this area here at 156.50. And then if that breaks, back down to these prior lows at around 152.50. Of course, there'll be another gap in here, most likely. Make sure to mark that. But if somehow, some way, price broke back above 163, I think you got a run up to 165.50 on Apple to get up to this top of this prior flag and the opening in this $1 gap. Tesla, I think 830 is your pivot. You've got a support level at 800 and a resistance level at 880 right here. What is that? I'm sorry, 860. My bad, 860. So 800 to the downside, 860 to the high side. If you can break above 860, you've got downtrend resistance, but a target of 875, 880 up at the top of this structure here. And if there were to be a breakout above that, then you'd be shooting for 905. I'm looking at futures right now, and they're starting to rip to the upside, so might be some news out there or something. We'll have to wait and see. Microsoft, 60-minute. I think you've got a nice pivot here at 290. You got support around 286 and then 283 down here on the downside. On the upside, you're going to have resistance at 294 and then 298, 299, where you've got a downtrend line and this old gap that's been filled, but probably some muscle memory there at about 298. Amazon, fake breakdown, rally into downtrend resistance where it let go into a bear flag breakdown right down here into 2900. I think that's a good pivot. You break 2900, it's going to come down here to 2830. If it can hold that level, then break above 2950, I think you got 2990, potentially 30, 40 right here at downtrend resistance in the bottom of this trading area. If there was a breakout here at 3040, I think it could see 3080 to 3100 there on the upside. Google, holding up well. I mean, it is in a downtrend. We dropped out of this consolidating structure right down here to 2615. I think that's a nice pivot. If we break above 2660, then you've got nice targets at 2680 and then 2710 at the top of this structure here. And you've got one last layer of resistance at 2725. Break above that, then it's probably on their way. Netflix really already down at the prior lows at 357.50. Note where the downtrend line comes in. You get a break above that. Could serve as a catalyst for a higher upside move here towards 387.50, 400, and 410. Bad day at the office for semiconductors on Friday. This is the daily chart. Focus on your downtrend line. Notice momentum trying to roll over below the zero line. RSI stuck in the bearish regime. Price below the 200. I think you'd have to see price take out 270 to recapture this 200 and this resistance, take out the downtrend line, and that would open the door for a run up to the 50 at 277 right here at the 50, and above that it would really get some acceleration, probably up to the 290 range. On the downside, really needs to hold this 248 area that was support back here, and back here. So watch 248, watch 270. And I want to wrap up with 3D. This was a stock that I never showed you the short setup on Friday, but I did get short this name in the April 15s. Big void in the charts as far as volume over price. Support is almost non-existent. I think the door is open for a run to 12. I'll show you the weekly chart here on 3D, and you can see that there was this really big run up, left a big void in the chart back here. So my target is down here at 12, where we'll just have to wait and see what's happening in the market, see if there's a reaction bounce there. But I think if price can stay below this 15.5, 16 area, I think the door will remain open to the downside. So let's wrap it up there. We're in the midst of a pre-market rally. See where that takes us this morning. Do a quick recap. Not a lot on the macro front this morning. You can check out the blog for the earnings names for today. I've got the calendar there. We've got a lot of headline risk, both positive and negative. Potential Russian oil and gas sanctions. That may spike oil. What else we got? We got gold on the move. Watch your resistance levels. Put together a little plan if you're in that. Where you might want to roll higher, or if you're just going to keep what you have. If you're not in gold or silver and you see breakouts, so for instance, an all-time high breakout on gold, all-time highs you got to buy. That gives you a perfect line to shoot against. So don't think that you've, quote, missed the move. Could go a lot higher depending on what's going on. Also, I did a post over the weekend. Trade's about to happen. A lot of steel names, lithium names, coal names. A lot of charts are setting up for weekly breakouts. So even if you would be thinking to yourself, oh, I missed a move, I missed steel, I missed coal, whatever, put those thoughts out of your head and then reorient on the weekly charts, because remember, weekly breakouts are much more important and significant than daily breakouts. So if you get a weekly breakout and it sticks, then that may be the signal for what could be a multi-week or even multi-month bull move on a weekly breakout. So find that blog post, take note of the tickers, set yourself an alarm, put together a little trade plan for that stuff. But I mean, all the hard assets, all the commodities, steel, defense names are working in general. Agricultural names are working in general. Cybersecurity names in general are working. Stay away from or even use high growth, high valuation bubble names like ARK as a protective hedge. I don't think they're done taking those names down. So I've got a number of shorts on the ARK complex just as a ballast to what I have on the long side and all the commodity names and all that kind of stuff. So if you're looking for names to short the weak names. Don't try to short the strong names. Buy strength, sell weakness. That should serve you pretty well. So let's wrap it up there. Hope you enjoyed the video. Hope you got something out of it. And I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.